Hello friends and welcome to my channel Simply Stocks, and today I'm going to talk about a very interesting company in the pharma space, and this is Gujarat Themis, which looks like a gem of a stock. I have been analyzing this stock in order to make this video over the past few weeks, so I've come up with this. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should start with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about this company, a small request is kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me, and we can work things out with a fee, and you can get WhatsApp membership as well. Now about the company. Established in 1981, Gujarat Themis is engaged in the development or manufacturing of pharmaceuticals and medical chemicals, and it went into technical collaboration with Yuhan Corporation of South Korea and ended up becoming the first firm to build anti-tuberculosis drug. It changed its business model to making exclusive drugs rather than being a contract manufacturing firm from 2019 onwards, and that just changed the way the numbers started to pan out. The market cap of the company is just under 1000 crores, and it is looking extremely attractive even after the move at this point of time. If you look at the financials, then sales were 45 crores this time around, a 40% jump from last year Q1, which was around 32 crores. Profit jumped by 40% to around 18 crores versus last year's of 13 crores. And remember, in the last 2 years, pharma companies or drug companies did extremely well. So on that good performance, if you're growing at 35-40%, it is pretty good. ROE of around 50% and margins at 52% is absolutely tremendous. Interest burden has reduced over the years, and there is decent promoter and institutional holding in the stock. If you look at the results in a little bit of detail, and what we see is that margins are down 100 basis points year on year but went up 600 basis points quarter on quarter. So brilliant performance in the June quarter compared to March. The margins are up 36%, not just 300 or 500 basis points from 2019. It is up 36%. The margins were around 14-15% when it was a contract manufacturing company, and it is now up to 51% at this point of time, which is a phenomenal jump. And that is why I believe that the current PE for the company is not quite where it should be trading at, and that is probably why the stock has been surging over the last few months. Sales growth of over 3.5 times from FY19 is absolutely tremendous. In a very competitive pharma market, they have changed the business model and has been doing extremely well. Reserves have expanded. 5 years ago, there were no reserves, virtually a few lakhs, and it has gone up to around 96 crores in the last 5 years from 2017 up till now. Mainly, what has happened is that shift towards making of tuberculosis drug and own manufacturing has completely changed the margin picture for the company, and I think demand will remain robust in this segment going forward. There's high promoter holding at 74%, which also augurs well, although it is a very small cap company, but yet a lot of you can say signals tell me that the company is looking strong, even being just at 900 crore market cap. So if you look at the revenue picture altogether in the last 3 years, in 2019 financial year, they did around 41 crores, and then they changed the business model completely. And from 2020 onwards, the revenue kept on rising. So it more than doubled in 2020 to around 85 crores. Went up slightly to 91 crores in a pandemic led year, in which a lot of other types of drugs or medicines or other types of illnesses that took a back seat. So that's where it did only 91 crores, but it has come out with very good numbers in FY22 of 115 crores, and now is doing even better. So I think I won't be surprised if in FY 24, by FY 24 it does something like 60% growth on this revenue and does around 170, 180 crores of sales or something like that. In terms of profitability as well, and this is where the biggest turnaround has taken place. So profits remained with margins of around 14-15%. Profits were in single digit, around 6 crores in FY19. It jumped to 24 crores because of higher margins, and again then 20%, 25% jump to 30 crores. So if you analyze the numbers between FY20 and FY21 in terms of revenue, so in the revenue scheme of things, the revenue grew by just about 5-6% from 2020 to 2021, but then if you look at profitability, it grew by 25%. So that is how the margin picture changed and the way numbers panned out on the bottom line. And then it had a jump of 50% growth in FY22. It jumped by 50%, so 44 crores of profitability versus 30 crores of profitability earlier. And I think this trend of 40 to 50% growth may just continue because of the high margin business that the company is doing at the moment. In terms of margin, so they did around 7% in FY19. Now they ended up doing 5%, 6%. So actually, this margin is not correct. So I'll just explain the margins to you here. So the margins were around 17%. There's a digit missing out here, 17%. And then from FY20 onwards, things started to look good, and 55, 56, and 56%. So basically you add another digit in here. 17% was in FY19, and then the margins went up to 55%, then 56 and 56%. So margins well in excess of 50% in terms of operating profit margin is what the company is doing at the moment. So some of the important pointers that you need to understand before investing into the company is that majority of the sales comes from India. So again, that factor of having businesses in US and Europe, that goes away because 95% of their business, 95 to 97% of their business comes from India. Most of their business is basically selling that tuberculosis or TB drug, and it was the first company in India to produce the drug. Margins, as I explained, of around over 50%, ROE of over 50% is absolutely tremendous, and profits have exponentially expanded post change in business. As I explained, from 6 crores the profitability has now gone up to something like 44 crores. It has gone up by more than 7 times over the last 3 years, although the stock has also gone up 7-8x over that period, but still is looking very attractive because the valuation, I'll explain the valuation in a bit, but the valuations are looking very attractive at the moment, even after the surge the stock has seen. In a difficult pharma environment, the company has done exceedingly well over the last 3 years. That is also tremendous. In terms of valuations part, currently it is trading at only 11-12 times earnings, or sorry, 13 to 15 times earnings. Expected FY23 EPS to be around 50 rupees. Based on that, the stock is trading at just about 12 times FY23 EPS. I think FY24 can easily do 25-30% growth on this. So around 62 rupees is the, you can say the best case scenario is around 62. I mean, the medium case scenario is around 62 rupees of EPS. Best case could be even 70 rupees of EPS. But even on an EPS of 62 rupees for FY24, we could see the stock trade at a PE of around 20. Hence, the stock could at least go to around 1250 level. So as I explained, expected FY23 EPS to be 50 rupees. I think FY24 we could easily see around 65 rupees trading at, if we see the stock trade at even 20 times, which is very reasonable. I would say undervalued even at 20 times. Even at 20 times earnings, it should trade at around 1300 rupees. But I think it can easily trade at 30 times over a period of next 3-4 years. And that is why I believe that if a 25-30% growth continue over a 4 to 5 year period, this stock could go up 4x to 5x even from these levels, because the stock should be trading at valuations much more than what it is trading at the moment. It should trade at around 30 to 35 times earnings at that point of time. With the earnings expanding, maybe by say FY27 going above 100 rupees, we could see the stock well beyond 3000. So that's why I believe that 4x to 5x move could be possible on the stock over that period. In terms of technicals, looks strong on charts, and you have to understand that it has recovered smartly from June lows. There's strong support around the 520 levels, but I think the up move is expected about 700 and can be accumulated on any dips. So I believe any dips towards levels of you can say, and any dips towards 600, 620, 580, 600 levels could be very good levels to get into the stock. So in my opinion, see, this is a stock which you can buy after you have built up your portfolio with Asian Paints and Pidilites of the world, Titans of the world, and some very good top class mid caps like DMart, etc. And then you can probably pick one or two very small cap companies which you can believe that over the next 5 7 years could become 5x, 8x, 10x, and this could be one of them. So it's not a company where you invest 10 15% of your total holding. It has to be less than 5%, maybe 3 4% of your total investment should go in here. Short term also it looks good, but I think preferably I would say that you invest into the stock from a long term point of view, and hopefully this could end up being that multi-bagger that you're looking at. But do not invest more than 5% of your total holding into the stock. So this was a video on Gujarat Themas. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.